We are piping in live to the Federal Reserve, and they're playing that song right now. So Jerome Powell finds that comforting as he is poised, he and his colleagues on the world's largest central bank, to hike interest rates for the fourth time in a row by 0.75 of a point. That would effectively bring us at around 4%, quadruple where we were certainly at the beginning of the year. All of this really didn't start until March of this year. So get ready. We are about an hour away from seeing that now. And then the big question becomes, what do we see after that? Dave Maney joins us, the Expert Press CEO. Scott Martin, Kingsview Asset Management CIO. Dave, what are you looking at from the Fed?
Well, I think that I have no reason to think that the expectation isn't correct, that we're not looking at the 75 basis point thing. I think when you sort of say, what are you looking at for the Fed, beyond that, I sense, and I sense this from our business and I sense this from other people that I'm talking to, there is, let's remember, this is we're still on our first year kind of out of the pandemic. I sense that supply chains are unkinking. I sense that we're seeing some return to normalcy in markets. It's been a long time since I've seen active shortages of things. And my guess is that some of the other pressure that's not just financial and not just rate driven is being lifted off. So I'm guessing this is going to be our last big lift, but that's just me.
Scott, let's say the Fed does what's expected, hikes interest rates by 0.75 of a point, but hints that it won't be that big in December, that it might be a half point. It wouldn't be so literal. But since that's the expectation anyway, how do you think markets respond to any of this?
Pretty tamely, Neil. I think because, like you said, the markets are expecting that. I think the worry is if the Fed does not give that trajectory, what does the market do? And they probably sell off. And don't forget, we've got a couple pieces of data coming out in the next 30 days that'll be really big. 2 CPI reports and 2 non-farm payrolls reports, which could determine what exactly the Fed does in December. So I think they'll be pretty, let's say, cloaked on what they're going to do going forward until that piece of data, or those 4 pieces of data, rather, come out and determine what they're going to do at the end of the month of December.
I just wonder how high is high, guys, right? I mean, Dave, the betting seems to be that by early next year, we're going to have a Fed funds rate well over 5%, and that it could go still higher from there. Others are saying that the Fed has to be careful, as it's indicated, and some, district presidents and governors have indicated, they don't want to overdo it. They don't want to tank the economy. It might be too late for that, but your thoughts?
I have trouble with that notion that the trajectory of a recession is so predictable. I think that, what they clearly don't want to do is create some kind of major housing price crisis, right? Which, if you keep sort of turning those cranks far enough, you eliminate all buying activity. And that is a market which has clearly sort of, backed way off, which underlies a lot of drivers for inflation. So again, how high is high? A little bit higher. I just sense it's not a lot beyond that.
Scott, I always get the sense that the markets are hoping for a pivot, a sign of a pivot, or ignoring stronger economic news and accepting it at face value for being stronger economic news. Not all the time, but lately more of the time. So does that, to you, represent a turn in market thinking?
Potentially, but as you mentioned, the better economic data, Neil, probably lets the Fed keep going on these hiking policies because they still want to cool the economy off. So I think the market actually would like to see maybe some more, say, lackluster data come out so the Fed can say, hey, we've seen the effect we've had, and therefore we need to pause, which would obviously push equities up and push rates down, which is what I think the market wants to hear.
All right, guys, I want to thank you both very, very much.